Alright, welcome back to another training video. In this video, I'm going to be walking through a live MNQ bullish flip trade on the 5-minute chart as it plays out in real time. You're going to see exactly how I spot the bullish flip pattern, mark it up directly on the chart, and take entry based on structure alone. No hindsight, no cherry picking, just reading price as it unfolds. This trade follows the core bullish sequence. Before we get into it, a quick disclaimer. This video is for educational purposes only. Nothing here is financial advice. Trading involves risk, and you are responsible for your own decisions. Also, if you want to strengthen not just your strategy, but your mindset, my book, Static in the Markets, Resilience, Risk, and the Mindset of a Precision Trader, dives deep into discipline, patience, and emotional control in trading and life. I'll leave that linked below. Let's get into the chart and break down this play step by step. This is a recap from my trading that I took on December 6th. When I woke up in the morning, it was about 6:30 my time, which is about 8:30 Eastern Standard Time. I jumped on the charts and I started immediately looking for the bullish pattern, which is this pattern here. Oh, hold on. See if we can get this better looking. All right. So when I jumped on charts, I was immediately looking for a low, a lower low, a market structure shift, a high, a higher high, and the beginning of a pullback. And that's exactly what was starting to form here. So this is how I marked up my chart on this day. It's going to look a little different because later in this video, you're going to see this trade example actually play all the way out with notes and commentary and how I took profit and how I moved my stop loss and all of that stuff you're going to see. But immediately I identified my low and lower low, which was here. I'm going to go ahead and change the colors here. So we have a low and then a lower low. Now we begin to look for the market structure shift. So immediately I was drawn to here. So you see this high took out this low. So using my fib retracement tool, I marked out this level here, which gives me the market structure shift. Our zones that we're looking for, and where we can put our stop loss and our protected low. Let's do PL for protected low and SL for stop loss. So immediately I noticed that we needed to have a sweep because that is part of that trade diagram. So the breakout that we had for the market structure shift pulled back and created this low. So this right here became my sweep slash entry, which we had just tagged into it right as soon as I got onto the charts. So after I have identified my low, my lower low, we have to identify our high, which caused the market structure shift. Then we have to identify our higher high, which would be the high that's left before it pulls back. And then this is also going to be our take profit target. I always label it TP number 1 because preferably you want to let the trade play all the way out. In the trade that you're going to see, I did take some profits because I was using confluences and not strictly just the pattern. But if you're going just strictly based off of the pattern, you want to hold until you hit take profit number 1. And then you can aim for other highs over here for take profit 2, or just have your stop loss moved up to take profit 1, and you can just let it run. If it pulls back, then you're done trading for that day. But anyways, so we identified our low, our lower low, our high, higher high, and our sweep slash entry point. What also gave me confirmation that this trade would play out is we are on the 5-minute time frame, and I have had very good luck trading this pattern on the 5-minute time frame. I have traded it successfully on the 1 minute, the 1 hour, the 15 minutes, but 5 minutes seems to be the sweet spot for me. I also noted that we had a high probability sweep here, which a high probability sweep, if you remember from my other lessons, it's where we take out the low and then the candle bodies immediately reclaim. So in this example, we closed with a wick here and then we immediately put in a market structure shift. So this gave me a clear bullish signal that we are going to continue to go higher. Change that to white. I like to make bullish things on my chart white, bearish things on my chart yellow. So after I notated all of this, this is the pattern. So if we pull up the picture again, let me get it up, we can see that we matched our pattern pretty significantly. I'm going to shrink this a little bit. So we had our low, our lower low, low, lower low, market structure shift, market structure shift, the high, the first high that was put in after the market structure shift, that gave us the pullback. And then this low created this high up here. So we had our high and higher high. We have identified our take profit number one, just like on our diagram. And we have our sweep entry point, just like on our diagram, along with our protected low and stop loss level. As you'll see in the video where this trade plays out, you'll see exactly where I put my stop loss and how I managed the trade. But this is what I was seeing when I first came into the market. Let's go ahead and go forward just a little bit. So when I got into this trade, I immediately took a position on the sweep entry. Well, at that time it was down in here. And then when we pulled down and we tagged into the 0.3, I added one more contract. I was a little skeptical, as you'll see in the video, and I put notes on there as I was going, because we got a little bit of a candle body close here on the 0.3, but we immediately bullishly reclaimed that and continued to break the high. If I'm not mistaken, we closed, yeah, that candle body above the high here. So that right there was another bullish signal that let me know that price was going to continue to go higher and that this bullish setup was still valid. I believe I had plans to, if it came down and swept again, to take another contract on the 0.5 with a total of 5 contracts in total. But it ended up just being 4 contracts. And I took most of the profit when it came up here into a confluence and I left one to run. So this here is a good example of the bullish pattern and how you can quickly, when you jump onto the screen, identify it, start marking it out, and anticipate that pullback. And then you're going to wait and see how we react to the sweep entry. Now, I myself am a little mechanical, so if I can get into this, if I spot this setup on the 5 minutes, I'll often put a market order for 1 to 2 contracts on the sweep entry point. This will allow me to immediately get into a position once we come into this sweep entry zone, and then I will watch for further confirmations, which were discussed in my other videos, that'll let me know if I can add to the position or close the position and wait for a new flip. That can give me another confirmation, so we either wait for another high probability sweep or we wait for we'll use the last video for an example, bullish fair value gap and a test of the fair value gap and it hold that fair value gap, and then that would give me another indication that I can get back into that trade. Now I'll typically only close trades if we get candle bodies close under the 0.5 because I have noticed from my own trading and examples that once we start closing candle bodies below the 0.5 and we start forming bearish fair value gaps in this zone, the trade will more than likely fail. So that's it for this video. I hope you enjoy watching this trade actually play out, and we'll have further commentary as we go. Welcome to the live trade example. In this, you're going to see that we have sped things up to save a little bit of time. On this trade, we have identified the market structure shift. We have our zone, protected low, and take profit identified. We have entered this trade already, and we have on the chart our 20, 200 EMAs and our VWAP. Right here, we have made note on the chart that The candle body has closed under the 0.3, so this gave us a little bit of hesitation in this trade that it might fail. We put a note on the chart so that way we remember if we get a candle body close below the 0.5, we stop ourselves out of the trade and we try again at another time. Just to note, this position was taken right before market open, so that's why price seems like it's struggling a little bit here. We don't have the volume quite yet to drive it to take profit. As price progressed, we saw that we were getting candle body closures above highs, letting us know that the bullish trade is still valid. Here we made a note that if we cannot close candle bodies above the VWAP, we will close the position. As we can see, candle bodies are still closing above the highs, giving a clear confirmation that the bullish trade is still valid. Because this trade is struggling to get through this bearish fair value gap, this is one thing that I have in the back of my mind, seeing how the EMAs are lined up with it. From here, we do not want to see price reject off the EMAs. We want to see it fly to take profit or start closing candle bodies above the EMAs. We closed 2 contracts at the 20 EMA, and we plan on using these fair value gaps as confirmation and protection for our stop loss. As you see, we took one more off at the VWAP and we let one ride to take profit. Alright, let's wrap this up. What you just watched was a live bullish flip trade on the 5-minute chart built around one thing first and foremost, structure. We identified the bullish flip, confirmed the market structure shift, had our zone, waited for the higher high, and patiently waited for a sweep to give us a clean entry with a strong bullish reaction. Risk was defined, the protected low was established, targets were based on prior structure, no guessing, no chasing. This is why the flip method works. It's simple, repeatable, and forces patience. If this helped you see structure more clearly, make sure you're subscribed for more trading education like this. I'll continue breaking down real examples so you can learn how to read the market with confidence. And again, if mindset is something you struggle with in trading, check out Static in the Markets. Strategy gets you in the trade, but mindset is what keeps you consistent. Thank you for watching, and I'll see you in the next one.